welcome to Crypto Kings Down Under. This is Leon. I'm here with Arden for Money Talk. Arden, how are you, mate?
Brother, yep. Welcome back to second episode of Money Talk. We're covering things outside of crypto as well. Take a little break from the charts and talk a little bit more about the economy as a whole and what we're seeing.
For sure. So I have an article that I shared on our Discord channel. Get across to the Discord channel if you haven't already, Crypto Kings Down Under. And it reads, BitMEX Arthur Hayes thinks there's a financial crisis coming. Here's why. Posted on March the 19th, 2022. And here we go. So former BitMEX CEO urges readers to put their feelings about Russia and Ukraine aside to recognize the economic consequences that recent sanctions will bring. So basically this talks about what's actually happening with the economy. You're getting one story when we're watching obviously the news and what we see every day with these wars and that. But there's another side to the war that nobody really understands, and that's what the spending and all these sort of blocks that the US are placing over Russia, the repercussions that are going to happen from that. Everyone thinks, oh yeah, quick, like whether you know what's going on with the war, whether you understand it, what side you're on, that all doesn't matter when you actually understand the things that can, the negative or positive things, not really positive, the negative things that can come out of the things that happen financially with the war. So I'll go on. Arden, anything you want to add?
You're right, mate. Keep going.
So last week, global investment bank Credit Suisse made a radical prediction. Now, Credit Suisse, they're obviously one of the Swiss major banks. That's where the money in the world is. When a Swiss major bank makes a prediction, most of the financial world listens. Their prediction, the dollar's era as the world reserve currency is coming to an end, and that commodity money such as gold will rise to replace it. This week, BitMEX co-founder Arthur Hayes builds on those predictions. He too believes that hundreds of billions of dollars will flow into both gold and Bitcoin throughout the next decade. However, he is also 100% certain that financial crisis and hyperinflation of the US dollar will ensure in the meantime. So, a couple of big things there are. One, basically all the money, or most of the money, hundreds of billions of dollars as it reads, will flow both into gold and Bitcoin through the next decade. That'll be great for the space overall. I'm sure you'd agree.
Yeah. We've discussed this as Bitcoin and gold being your inflation hedge, and obviously these guys are saying the same thing. When we see this endless money printing that we have seen, and it's ramped up even more through the last 2 years with COVID, there's going to lead to repercussions of inflation and hyperinflation. So,
that was the next point.
It's good to just see that these guys are the same.
That's right. And basically, financial crisis, hyperinflation will ensure, and it says here he's 100% certain. So this is the ex-CEO of BitMEX. BitMEX, one of the largest crypto exchanges, has been around since a long time as well. One of the oldest as well, more established. This guy, obviously, he's in the know. He understands economics and things like that. And he's 100% certain, he says, is how it's written, that there's going to be hyperinflation and a recession. We had a recession in 2007, 2008. We touched on this in Money Talk, Money Talk Volume 1. And basically, it wasn't a good time. A lot of businesses found it tough. Lending got tough. We talked about the lending in the US, the poor lending policies that the US had, which basically led to that. But we never really fully hit hyperinflation. We definitely had, we probably did hit hyperinflation there, but I don't think like the hyperinflation that's coming. I think to be actually calculated as hyperinflation only needs something like 5% inflation year on year or month on month or something. So it is a sort of a scary statistic, but not that outrageous. But I believe the hyperinflation that we're in for, it's going to occur when this whole fucking shit fight unravels, I guess you can call it what you want to call it, is going to be unprecedented for our generation, I believe, and probably our parents' generations as well. I don't think it's going to have been seen before. Um, let's continue on with what this article says. So, as explained in his recent BitMEX blog posted, energy cancelled. The freezing of over 600 billion in Russian foreign reserves will shake other world's governments' trust in storing their value in US treasuries, China in particular, which has the world's largest budget surplus of over 270 billion annually, will no longer use this to grow its fiat currency position. As Hayes calculations predicts that China and other trade surplus nations will look to gold and other storable commodities to park about 967 billion in value annually, which used to belong to fiat. So basically, through the US freezing all this money of the big wigs of Russia and stopping money from pouring over into the Russian bank accounts through this war, Hayes' prediction is that over $1 trillion a year now will pour into Bitcoin and gold and other commodities, as opposed to dollars within the fiat currency system, because they don't trust it. The trust has been broken there. The fact that it's controlled, it's centralized, and they've shown that they're willing to just turn the switch off. That scares people. That scares countries that are outside of NATO. We were talking earlier. So everyone's familiar with NATO, which is National Alliance, whatever it is. I don't know exactly what it stands for, but it's basically all the Western countries: Australia, America, England, and those they're joined up. So there's an opposing sort of alliance as well, Arden.
Yeah, so you've got the BRICS nations, which is Brazil, Russia, India, China, South Africa. So, I guess it's the opposition, right? So when you see these sanctions and you think, oh yeah, NATO's gone in and
NATO's
sanctions on Russia, rah, everyone else is against Russia. Well, that's not actually the case. So you've actually got the BRICS nations as supportive of Russia and will still be making deals with them. And they are making deals with them, along with some other countries like Saudi Arabia. So they still want oil. They still want to deal with Russia. If they can't use the dollar and they can't use the petrodollar in the case of oil, they'll make their own agreements. And essentially that's, whichever way you look at it, that's the US and NATO now, I guess, cutting their nose off to spite their face, because they're expecting a certain outcome with these sanctions. Obviously, they want Russia to back off with the Ukraine, and they think they'll hamstring them that way with, these sanctions economically.
And they'll tell you, it'll be reported through Western media that they're cutting them off and everything's working brilliantly, but it's really them grasping at straws, trying every little trick in the book that they can to maintain their power, which is being lost. It's clearly being lost.
These countries will basically go around. They'll do these side deals now outside of the US, which is just going to further weaken the US economy and the US dollar. And like Leon said, that faith in the US dollar. So we've got to be very mindful of what could be going on here with the likes of Russia, China, these other BRICS nations. And is this potentially the collapse of the US dollar, which we believe it is, and then that all ties in with this inflation and hyperinflation potentially of the dollar. So again, back to this article about holding gold and Bitcoin as the hedge for that.
So the next line, after, as we spoke, it talks about basically $1 trillion annually flowing no longer into fiat, but now it's going to be going into commodities, etc. The next line reads, by contrast, this will severely weaken the strength of the US dollar, which is already combating the highest inflation it's seen in 40 years. So we talked about the GFC. We talked about inflation being an issue at the time, and how tough that was for businesses and the flow-on effects around the world. Well, remember how reported on the GFC was at the time. We knew it was happening worldwide. Well, this article tells us right now that the US is in inflation, in an inflationary. It's the US dollar. What does it say? Is already combating the highest inflation it has in 40 years. So the worst it's ever been in right now, but you're not hearing about it. That's got to be concerning. Surely that's concerning for some of you listening. I hope some of you are hearing for this first time and realizing that this is what's happening. The fiscal, financial, economic policies of the US are that rooted. They're in worse turmoil than they were in the GFC, but no one's even reporting on it. That is concerning. You know what's happening? There's a big war happening over in Russia. They're bombing and Russia's invading Ukraine, and the US is over there being heroes. But there's no problems with the US dollar at the moment. Don't worry about that. It's just in worst inflation it's ever seen in 40 years, as this article reads. So we'll carry on. The phase shift will be chaotic. It will be volatile. It will be morph. It will be 100% massively inflationary in fiat currency terms, states the exchange founder. The Federal Reserve recently ended its US Treasury bond purchase program to help curb skyrocketing prices from across the nation. However, as other countries move their wealth away from the bonds and into commodities, the Fed will be forced to purchase US bonds again in order to finance its debt. These purchases will be funded, and of course, through more money printing, that will spiral into hyperinflation even worse. For context, the US runs a $600 billion account deficit every year and had to sell $2.8 trillion worth of bonds to pay for that deficit in 2021 alone. So the US basically printed up $2.8 trillion worth of its own money and bought back those bonds from itself just to cover the deficit in 2021 alone. Now, what you guys need to understand, if you don't understand fiat currency, is it's inflationary and there's debt, and debt only ever grows. And so when they borrow what was the $2.8 trillion worth of money in 2021, then they need to borrow more money than that in 2022 because the debt will be bigger. That's the part that no one tells you about these amazing financial systems that have been the frameworks for the Western world for the last 50 years. Since the US dollar came in, it always was going to be a back-ended bad deal, I guess. It gets worse at the end. And I'm sure the policy makers knew this at the start, but I guess that they thought that they were going to flip and change before it got too bad, or maybe they knew about this all along and it was always a plan to wind it all down. But we're not going to go down the rabbit hole. We're here to talk about what's happening with the finances. And also, anything you want to add in there, Ards, before I go read on in the article?
Man, carry on.
Righto. So through Bitcoin, though Bitcoin is often referred to as digital gold by some investors, Hayes says that he's no maximalist. So a maximalist is basically someone that thinks Bitcoin is going to be the be-all and end-all, and if you're not investing in Bitcoin, you're putting your money into silly things. Basically things that only thing that holds value is Bitcoin. It's pretty crazy and out there, but there are some people like that, and some pretty smart people like that too. Doesn't mean that I agree. So anyway, Bitcoin currently trades more like a tech stock than a safe haven asset, indicating that the world doesn't yet recognize it for its hard money properties. As such, governments will spend most of their money in physical gold for now, which has the philosophical and historical precedent as a monetary instrument. That doesn't mean that digital gold won't benefit. Hayes remains confident that this new era of gold takes place. When this new era of gold takes place, some central banks will choose to start conducting trade in Bitcoin instead of shipping gold around the world to pay one another. Obviously, that's some of the benefits of Bitcoin and cryptocurrencies. It's how quick you can send stupid amounts of money to anywhere, to anybody, at any point in time. That's the freedom that this amazing technology, just one of the things that it allows. Again, I'm fully confident that on a personal level, if you believe you should spend fiat and save gold, the mental leap towards spending fiat and saving Bitcoin is minuscule. So basically is there saying that if you've been saving gold, or people that have been putting their money into gold, governments that have been putting their money into gold, won't have that much of a hard time storing money in Bitcoin eventually, because they'll see that it's sort of it trends and
A
acts
like for like.
it's a like for like, basically. Even though it's a digital version, it has that same property. The exchange founder concludes that gold will march to 10,000 and Bitcoin to 1 million as the collapse of fiat triggers the largest wealth transfer the world has ever seen. End article. So, pretty heavy article. We were going to discuss a few articles today, but I think this one is, it's got a strong enough message, and I've, you know, it's one that you and I know resonate with, mate. It's something that we believe. We've all, like this, we've been investing in this space for 5 years plus now because we have that outlook. We've been looking at the fiat currency, the Australian currency, and how it works with the US and the fiat systems, and looking at ways to protect ourselves against the poor structure that it has. Like obviously
the Ponzi structure.
Basically, unfortunately, that's that. You know, it's almost what it is. And unfortunately, though, it's not something that you just jump out of, because it is what we use every day at the moment as well. So there comes a point in time where, you know, we believe that this currency system that we're operating on at the moment that's broken is going to break and will be no longer, unless they, who knows, magically try something. And at that point in time, the next currency or system takes over. We're believers of Bitcoin. I think also believers that, you know, things like gold and silver and some sort of barter system, I think, like is gonna take hold or come back.
The way I look at it in terms of the US dollar is right now it looks as though there's another superpower emerging, whether that be China and the Chinese yuan or something else. It looks as though this is the death of the US dollar, and I guess, you know, in terms of predicting what that next currency is going to be, who's going to be the dominant currency, going and buying your fiat now into another fiat that you predict is going to be the next winner, is probably difficult. But a couple of things that you know you can rely on is gold and silver have always been around, even if they don't go up in value in the US dollar term. If the US dollar hyperinflates and is worth nothing, and the gold is obviously going to go up in its own value or hold value against the Chinese yuan or the other currencies that become the dominant one. So gold will do that, and we believe Bitcoin will do the same thing. Silver is the same. So these hard assets or you know, or Bitcoin or digital gold.
Hard commodity assets, or now also we throw into that cryptocurrency assets as well, I guess.
Yeah. I think you know, that's the better hedge than trying to go and predict, okay, the Chinese yuan in 5 years is going to be the dominant currency. I'll go and buy 10 grand's worth of that. I think you just stick with the precious metals, and obviously that's what that article says, and a lot of what Leon and I have been thinking about pretty much since 2008. Like, we saw the GFC, and we knew that wasn't really the full unwinding. We went straight into quantitative easing and money printing in the US, and then all the other countries followed.
Silver and gold started to go crazy, and then all of a sudden just shot back down again.
We've just seen this, but now we've now kicked the can a decade down the road, really. That's all we've done. 10 or 15 years down the road.
Arden says kicks the can down the road. I've been explaining this scenario to friends of mine for years, and I say it like this. We've got a big cut on our arm that needs 100 stitches, and what they went and did was threw 4 Band-Aids over it. It looks like it's nice and clean, but when it comes off, it's going to rip apart.
Yeah. So, I think that's a good enough one for today, Leon. We'll obviously, guys, this is a lot to unpack, so probably go through an article at a time and talk about how it relates to what we've already discussed, because it's all intertwined, and it's It's not just Bitcoin related, and it's not just chilling, going out and buying more Bitcoin. Although Leon and I do believe in that to protect our wealth.
That's our hedge. That's our protection. But we're not here to tell you guys to do that. We're here to bring this to your attention. Hopefully, some of you watching this video are now aware of the word hyperinflation if you weren't already, and are now going to go and start looking into that, because I've been calling hyperinflation, I'm not trying to talk myself up here, but I've been talking about hyperinflation on my Facebook, my personal Facebook page, for 4 or 5 years now. Not every day, but you'll see random posts every 6 months. Like, be careful, one day this hyperinflation's coming. And like Arden said, they've been kicking the can down the road since 2008. Now, 15 years later, I've been waiting every year since 2007, 2008 for this crash to happen. And it's just getting closer and closer. And, you know, I don't get out there in personal conversations with friends and talk too much about this, because it is one of those things where I'm a fool. I'm 100% certain it's happening. But the problem is, our governments are that fucking shady around the world that they keep delaying this actual, they keep stopping the real bomb exploding by doing things like quantitative easing and all that sort of bullshit, and this economic stimulus that they've been doing in fucking Australia, and the support programs for the fucking pandemic. Like, everyone loves to take the $1,000 that they got for having to have a week off, but no one thinks about the 20 million people get $1,000. That's $20 billion that Australian government just fucking spent. That we did. Where'd it come from? You just pulled it out your ass. Oh, we got to pay some debt on that, guys. Like, we need to start being responsible and understanding how our financial systems work, and preparing ourselves in case the crash happens. I'm certain it's happening, but like we said, it's been kicked down the road for 15 years. They could kick it down for another 15. I don't think it will ever last that long now, and especially where it's at. I believe the time is now, and we're going to see this unfold in the next 6 to 12 to 18 months tops. But I definitely won't be surprised if it takes 3 times longer than that, because I've seen these guys rinse this shit for that long already.
Awesome, man.
Right.
Kick off another one we'll probably try and do these once a week, guys. But if there's more pertinent news or urgent news, we'll bring them out sooner. Jump over to the Discord, like and subscribe if you're on YouTube, and come and join us in the discussion in Discord and let us know your thoughts.
Make sure you give us that like if you like the content, guys. It helps to grow the page and get this information across to other people. And who we got to tell?
Tell mum, tell dad, tell grandma, Crypto Kings down under.